welcome to the latest session of our inquiry into the economic consequences of the coronavirus. I'm delighted to be joined today by three very eminent witnesses with experience in the economics of these matters, and I will ask initially for each of them to very briefly introduce themselves to the committee. And if I could ask them to do that in the following order, if I could start with Hamish, then Nicholas, and then going on to Bridget, please.
So my name's Hamish Lowe. I'm a professor of economics at Nuffield College in Oxford, and I work mainly on issues of consumer spending and savings, and also how it interacts with labour markets. And a lot of my recent work's been using understanding society to understand how COVID has had an impact on people's behaviour.
Hamish, thank you. And over to Nicholas, please.
My name is Nicholas Macpherson. I was Permanent Secretary to the Treasury from 2005 to 2016.
Thank you. And Bridget?
I'm Bridget Rosewell. I'm a Commissioner with the National Infrastructure Commission and with a variety of other roles, including chairing a Challenger Bank and having been Chief Economist to the Greater London Authority for 10 years.
Great. Well, can I thank all three of you for taking the time to join us today. We intend to finish at 5:30 sharp, if not a little bit earlier. I've asked colleagues on the committee to direct their questions where they can specifically to one or more members of the panel, so you know who's been asked to reply. If at any point you haven't been involved in a particular part of the discussion and wish to be, so please just raise your hand and I will endeavour to bring you in at that point. And I should begin with a very small declaration, which is that back in the early part of the 1980s, Bridget Rosewell tutored me briefly in economics to great effect. I'm hastening to add. Okay, so can I?
That was a long time ago.
It was a long time ago, and I can't claim I remember absolutely everything, but I remember being very impressive tutor and mentor at that time. So thank you for that. So can I direct my first question to Hamish, please? So the alphabet soup. What kind of recovery are we going to have? Is it the L, the U, the Nike tick, or whatever it may be? Based on what we know of the economy at the moment, and particularly, I know it's only just recently happened, but the Chancellor's statement this afternoon and the measures that he's set out, both in terms of tax cuts and support for jobs and so on, what do you think the outlook looks like at the moment for recovery?
So I think there's two separate bits. There's one bit is what we think has gone on up until now, and secondly, the kind of speculation of what's going to happen as a result of these the new measures. I think that the key message, which I think we take from the data we see at the moment, is there's just huge heterogeneity, huge differences across different sectors in how this is being affected. In that we see this precipitous decline in labour market outcomes in some areas and very little decline in other areas. So I think that I find the kind of talking about, is it a V or W, whatever the alphabet is, in some ways I don't think is that helpful in terms of understanding who's actually most affected. And I think what we should be thinking of is, if we look at different individuals in different sectors, different bits of the distribution, we should be asking, how are they affected, rather than trying to think overall, what's the overall shape of the recovery. I think that's on the kind of historical, if you like, up until now, what's going on. In terms of the projections going forward, I'm sure we're going to spend a lot more detail on on what we think or what's going on in terms of the recent statement. I think, again, that the key thing here is this trade-off we've got between understanding what the short-term, long-term effects are. The short-term is going to be driven by the supply shocks, and the longer term is going to be understanding how permanent are the demand changes. And so again, I don't want to try to say this is a particular shape of recovery, but I do think the key parameter is distinguishing what we think is going on in the short run for the long run. And I think that kind of feeds then into how I think about the measures which the government's putting in place. In some sense, the short run measures are really, the short run problem is really a supply problem. And then in the more medium term, longer term, it becomes a demand problem. So that would be my kind of broad thinking about the way things are playing out at the moment.
Great, thank you very much. And Nicholas, could I just ask you, just turning to the part of the statement today that was about a VAT cut specifically targeted on leisure and hospitality. Is there a danger here that the government rushes out with this stuff too early and gets it wrong on the basis that there's lots of pent-up saving out there because people haven't been able to engage with the economy in the normal way? We know there are restrictions on the supply side due to social distancing. And actually, we end up pumping a whole load of demand into an area where actually it just feeds through into price increases and doesn't actually do much to support jobs. What's your take on it? Having been an insider at the Treasury and knowing how they will have analysed these things, the tools they had, what insights can you give us on that, please?
Well, I thought the package announced today was relatively small, by which I mean the VAT measure will pump in much less demand than a generalised VAT increase. It's targeted. So I don't think in itself that's going to give rise to overheating. Quite a sensible targeted measure in my view. I mean, if we do end up overheating, I think it's far more likely to be the cumulative impact of QE fiscal measures already implemented and announced. But I think the risk of that in the short run is reasonably low.
So would you think, they're just taking the broader point about overheating, and I know inflation's down at very low at 0.5%, but there is a scenario, is there not, in which inflation spikes up, perhaps a world recovery, perhaps some of the energy prices increasing, various things happening that might cause that, and then the effect that would have on QE and perhaps having to indeed unwind QE at that point, and the effect that would have on the government's ability to borrow at very low rates. Is that kind of mechanism and argument something that you think the Treasury will be keeping a very close eye on, or do you think they're relatively relaxed about the possibilities?
I suspect the Treasury will be keeping a closer eye on it than most people, on the grounds that someone has to worry about these things. Mm-hmm. And I think there is a risk at the current time that because the government can borrow at virtually no interest rate at all, it's just going to keep on borrowing and keeping on spending. And the residual Treasury official in me kind of worries that this government has yet to take a tough decision on public spending. Indeed, I'm not aware of this Prime Minister ever taking a tough decision on public spending, either when he was a mayor or as Prime Minister. So now it may be that actually when the time comes, they will do whatever it takes to ensure an even glide path and a steady consolidation. But it is a slight worry. But as I said earlier, I think in the short run, the risks are pretty low. And actually the way inflation is most likely to become embedded is through a steady downward depreciation of sterling. And there the issue is, it doesn't really matter if our approach to economic policy is incompetent, so long as everybody else's is incompetent. Yes. And at this stage, I think it's far too early to tell. I think we're doing broadly the same as other countries. I think the government's intervention has been quite sensible. And if I was in the Treasury still, I'd be going down to Westminster Arms tonight to have a celebratory pint of lager, because they've kind of got away with it and they haven't been forced to do things which are completely excessive.
Okay, interesting. So another approach to having problems servicing the debt at a low rate of interest wouldn't be just inflation, I guess, but might be that the markets feel, and maybe this is something of what you're saying, that the government doesn't have a clear and credible plan for handling what will be an elevated structural deficit when we come through the crisis. If that's the case, that there is a risk of that, what do you think the Treasury will be thinking at the moment in terms of when it has to come forward with that plan, I mean, are we talking about the autumn around a budget, perhaps? Or do you sense that it might think it's got longer than that? What would your sort of feel for that be from a Treasury perspective?
I don't think the markets, or indeed anybody else, would be worried by what the government is doing, provided it doesn't plan to run a deficit of 15% of GDP indefinitely. So I think the autumn is the sensible point, not necessarily to populate the whole plan, but to set out how the government expects to get back onto a sort of broadly sensible path. It reminds me a bit of the debate in late 2009, early 2010, when there was a debate, certainly in the Treasury, with Number 10 in particular, about whether the government needed to set out a consolidation plan. And then there was a debate in the general election. Alistair Darling had set out one plan, which in fact was the one which pretty much got implemented in the end. And Mr. Osborne had set out another. But I think by the autumn, as I say, you don't actually have to set out every last tax increase, but you want to set out a path for revenue and spending, which you broadly want to stick to.
Thank you. That's very helpful. Bridget, can I turn to infrastructure? So of the tools that are being used here, we've got some tax changes, some demand stimulus, etc., but we've also got spending on infrastructure. Could you just unpack for us the particular benefits, as you would see it, of investing in infrastructure as opposed to, say, things like demand stimulation, tax cuts, VAT cuts, etc.?
Well, the big advantage of investment in infrastructure is that you should do it with some kind of a payback in mind, so that infrastructure is going to generate opportunity, it's going to generate long-term confidence in the economy, and you can see what it delivers in the longer term. Now, it's true that some of that infrastructure spend will be short-term, and that has a direct impact. If you can immediately spend money on companies that would otherwise really struggle, and the construction sector has clearly been struggling with stopping house building and a number of other these sorts of areas, then enabling some of those companies to use their existing resources on things, even really basic things, like, for example, local projects in road mending. It sounds rather boring, but it's actually very, very important and makes a big difference to all of us as we drive around, and particularly out in outside London and in the rest of the country. So all of those things have an immediate benefit. They also maintain an effective supply chain, and even small sums of money can help leverage that. But what's really important for the infrastructure story, I think, is that we maintain a long-term focus. We maintain confidence that Britain is open for business, all of those sorts of things. And after all, in general, in almost all of the jobs in this economy will be in the end created by private sector firms. And we need those private sector firms to be confident in their own ability and willingness to invest, to train people. And that requires them to have confidence and them to have a supply pipeline that will carry them forward. So that can have short-term impacts, as well as knowledge that you're planning for the long term can carry us forward into a period where you're getting payback on those investments.
Right, Bridget, thank you very much for that. I'm going to move on now, because I think my time is up, but go over to Julie, please.
Thank you very much, Chair. I would like to explore the effectiveness, or otherwise, I guess, of VAT cuts in stimulating spending and how it might contribute to the recovery. So if I might start in more general terms rather than the announcement today, and ask Professor Lowe, please. Could you briefly explain for the benefit of the committee how VAT cuts can assist in stimulating spending, please?
Sure. So let me focus on a sort of temporary VAT cut, but as you said, not think at the moment about restricting it to particular sectors. So think about a temporary VAT cut. There's two different mechanisms which it uses to change people's spending or to stimulate demand. The first one, I think the important one, is that it changes the price today versus the price in a year's time. So we see that when the VAT cut was done 2008, 2009, the price was low for a year and then it went up at the end of the year. So what it does is any spending which you can substitute over time, you're going to bring forward in time. And that's exactly the sort of stimulus measure you want to put in place. You want to put in place a stimulus measure that changes the timing of consumption. So because you've managed to make things cheap today rather than tomorrow, you're going to bring things forward. And I guess that's going to have an impact on different sorts of goods, depending on things like how storable they are. So goods which are storable or durable are much more likely to be benefiting because of that sort of intertemporal, that substitution over time that goes on. So I think that's the main mechanism which I think it works. This other mechanism is just as straightforward. You're giving people more income. Because you've cut the amount of tax people are paying when they spend money, you actually end up giving them more income that they can spend on other goods. The reason why we think that's small for most households is that you're talking about a few £100s across the year. It's not a lot of money which you're giving to people to actually spend for the majority of households in terms of the actual changes in their lifestyle. So the question then is, if you gave people an extra £500, how much would they actually spend out that £500? And for a lot of individuals, it's not going to be very much. So if I think about those two different mechanisms, the one which is about the price change, so having it cheap today versus expensive tomorrow, that induces a lot of individuals to change the timing of their spending, as opposed to giving them extra money, which is only going to have an effect for some people. I think it's worth just saying, who's that extra money going to have an impact on? I think it's going to have an impact on households who've got no savings or borrowing and who are very constrained in what they're going to do. So households who are very much dependent on living hand to mouth, that extra money which you give them through, whether it's through a VAT cut or what it's through, is actually much more beneficial because they're going to spend more of it themselves. But I think it's a crucial issue of that, if you like, that kind of the propensity, how much of the money you have would you spend anyway, drives the size of that income effect. But the kind of bottom line, what we were concluding when we were looking at the last VAT cut, was there's really that substitution effect which is driving the effect.
Thank you. Do you think, because this is primarily a health crisis, as to say, you know, in 2008, 2009, primarily an economic crisis, how much do you think that really makes things different this time in terms of how effective VAT cuts could be, because of the, I guess, people's uncertainty as to how the virus will develop, whether there'll be a vaccine and so on?
So I think so in some sense, what are the differences between 2008, 2009 and now? So it's a different sort of impact you can see because different sorts of people are facing different economic shocks. So it is a health shock, but it's become an economic shock. And I think the uncertainty here that's really important is, in terms of demand stimulation and so on, is actually a lot of it's going to be individuals uncertain about their jobs, uncertain about their future incomes. Of course, that's going to be tied into what happens through if there's a second wave and what health measures are in place. But I think that sort of level of uncertainty is a very similar sort of underlying economic uncertainty, which may reduce the impact. And I guess what that means is so why would you think it's less effective now, a VAT cut? You might think it's less effective because, as Laura Macpherson was suggesting, that this is about supply constraints as well. They may not be able to meet the extra demand. You may cut prices, but if there's rationing, it's not going to be passed through to consumers, and so you won't see any demand boost. So that's why it may be less effective. On the other hand, it may be more effective. If you think about the 2008, 2009, there was across the board falls in demand. There were supply constraints, primarily caused by lack of being able to borrow. It had a big dampening effect on what was happening. So in this case, there are areas where there's still scope for expanding demand, where demand may actually lead to a boost in the economy. So I can still see why it have that sort of impact. So I think there are some differences, but the core mechanism is still the same. And I think the question is which areas of the economy are not going to be beneficially stimulated by these sorts of cuts.
Thank you. You wrote or co-authored a paper in 2009 where you assessed a temporary cut of 2.5%, giving maybe a 1% increase in retail spending. How would you anticipate that transferring to the circumstances we see today? Do you think there's any comparison in those figures?
So I think the main comparison, the figure which I'd like to take from that is if the government spends an extra pound of its revenue on a VAT cut, what fraction of that do we see mapping through into residential spending increases, in spending increases? And the numbers we were getting from 2008, 2009 and the subsequent analysis it was pretty much 1 for 1. So we were getting a pretty high pass-through in the end of the government spending being passed through into increased consumer spending. So that would be the number which I would think of as being the benchmark I would take for any stimulus package on that sort of basis now. The reasons to think it may be different because of if it's targeted, or it could be different because as uncertainty resolves over time, and also because of the supply constraints. So our reasons may be different, but I would start with that 1 for 1 as being my kind of main metric. I think what's interesting about that number is a lot of our results were coming about from changes in durable spending, or we believed it was coming out from changes in durable spending. And durable spending is really one of the main ways in which you'd expect to see VAT cuts working, because it's durable goods which are, you spend the money now, but you get the benefit over the future. Whereas other sorts of spending you can see is much less amenable to storage, or it's much less amenable to getting the benefits today and then actually still feeling the benefits tomorrow. So that number of 1 for 1, I think, was being driven to a large chunk, or to some extent, by the durable spending.
Thank you. Can I turn to Lord Macpherson? And in terms of not taking aside today's announcement, could you give me your views on the pros and cons of a cut in VAT from the different perspectives of the government, businesses and consumers?
Well, there's a reason why governments generally turn to VAT cuts in these situations. It's because it's very easy to administer. So the problem with other interventions, often they're a lag. So you can do it immediately. From the government's perspective, you can be reasonably confident for the reasons Professor Lowe has just set out, that it's likely to translate into more expenditure. And I think I didn't really feel this much when I was at the Treasury, where I was quite cynical about these measures, but I think with time I'm beginning to believe the sort of pure milk of the view that sometimes taking action can instill confidence. I can remember Lord Mandelson being very proud of his car scrappage scheme in 2009, whereas my view was it was mainly a bung to the Bavarian car industry. But actually, I think Lord Mandelson may have been onto something. Action does sort of kind of look as if the government is on your side. And so business and consumers should benefit. The only problem with time-limited interventions is if things go from bad to worse. And you then have a rather unfortunate choice of, do you extend the temporary reduction, in which case, that could hit your public finances at the point you're beginning to really worry about them, or do you withdraw it and then that's blamed for making things worse? There's a bit of that effect with the stamp duty reduction by Norman Lamont in the early 90s, where it was withdrawn quite early and the big house price deflation followed the withdrawal. So there are a number of things which need to be balanced, but I think that is a good tool. It has an impact, and you just don't want to reduce it for too long so that people get so used to it they just expect it.
Thank you. And just very briefly, because I know I'm nearly out of time, but turning to today's announcement, if you look at maybe having done nothing, that there was a chance, I suppose, even if it's theoretical, I suppose, but that demand could, because there's a pent-up demand, consumer spending could have just bounced back on its own. What do you think the impact of today's announcement could be?
Well, I think there's every chance that consumer spending is bouncing back. The question is it bouncing back quickly enough, and is it impacting on sectors differently? And I think the case for going for the hospitality industry, I mean, interestingly, it doesn't fit Hamish's paradigm, because you can't store tourism, you can't store, at least not very long, hot meals. So you could argue that actually, if you want to have a real effect, you should be, focusing on cars or whatever. But I think that, the domestic content of the hospitality industry is very high. It needs a bit of a kickstart. They're not throwing massive amounts of money on it. We've got the gimmick in August where I'm much looking forward to spending some vouchers. Look, I think it's a perfectly respectable package.
Thank you very much. I'm out of time.
Great. I'm just going to bring Hamish, I think, wants to come.
I was probably just going to ask him on this subject, Mel.
Then I will go straight to Harriet. You ask away, and Hamish, you can make the point.
That was going to be my first question, was to Professor Lowe about the eat out to help out, and any other thoughts on the VAT cuts for the hospitality sector.
So I think that the eat out to help out is it's a slightly gimmicky sort of thing to do. It's kind of nice, but it's kind of not a major, it's not really a big issue. The VAT cut, I think what's important to think about the VAT cut is, because it's targeted on the hospitality sector, we've got to ask, where's the substitution coming from? So we've got to think, if it actually works, so you actually end up with people spending more money, it's a very different mechanism than the mechanisms I was describing. And it's different because you've got to move your substitution from some goods into the hospitality goods if you're going to increase demand in hospitality. It's not got that same over time feel about it. I know it's temporary, but because it's not really an intertemporally substitutable good, you're going to be taking your spending elsewhere and spending it in the hospitality sector. So I think that sort of targeting of it creates a very different sort of mechanism, which means it's going to be less effective at actually boosting overall demand. Because
But you have expertise in the behavioural side of things as well, as I understand. And, one of the observations the Chancellor made in the printed materials was around how much households have actually added to savings balances during the lockdown, and the caution that the caution that consumers are exhibiting in terms of going to restaurants, and the fact that consumers have increased the amount in their savings accounts. I mean, it's a very targeted behavioural measure, and you're a behavioural expert. So, do you think it will do the job?
I wouldn't say I'm a behavioural expert, but I think there's two different things. I think there's an issue about the pent-up savings and where that pent-up savings are going to go and what they're going to be spent on, and how we could use different packages to get that savings to be spent on consumption. That's one issue. I think there's a second issue, which is specifically about the hospitality sector, which is about, you've got a substantial cut in supply, and it's going to be hard to see what capacity is actually remaining in the hospitality sector. If supply is at 50% with social distancing, then we're not going to need to see any demand boost or much of a demand or much of a demand bounce back to meet that 50% capacity. And I think that's the real issue with the hospitality sector. I completely agree that it's important we get people to be back at restaurants, but the extent to which we need them to be back is not actually that much if we're running at 50% capacity. So I think that's
yeah. Can I? Sorry to cut you off. Can I turn to Bridget now about the pipeline of infrastructure spending and the importance of infrastructure spending in terms of the recovery? Did you get consulted at the National Infrastructure Commission on the projects that were announced in the Economic Recovery Plan?
So we've been saying for some while, and including in the National Infrastructure Assessment, which is with the Treasury, about the importance of energy efficiency, about the importance of broadband rollout, and many of those aspects. So we were in continuous conversation with the Treasury. We don't have a particular, all of those individual announcements are always kept close to the chest. So we're certainly not told about them in advance, but we put in advice on all of these topics over the last few years of our existence.
And would you say that all of your projects are sort of shovel ready? Is there such a thing as a shovel ready project on your list?
Thank you for asking about shovel ready. I hate this terminology. I think it's a complete misnomer to say that there are shovel ready projects. The projects are ready for the shovel when the shovel goes in the ground and you've written all the contracts and you know what you're going to deliver and who's going to deliver it, then it's shovel ready. You can have continuous streams of activity, maintenance activity, for example, which you can accelerate and pull back. But again, that is done efficiently if you do a long-term plan for it. And trying to change things like how Network Rail operates, I've been on their board, in a very quick time frame, it's really, really difficult to do well. So I would really like us to move away from saying that we should have a list of shovel-ready projects out there. We should have the ability to flex some things like road mending and these sorts of things where you've got an existing supply chain and it can do more or do less. But we should be, and that's the whole point of the National Infrastructure Commission and why I was very pleased to be invited to sit on it, is the importance of that long-term plan and the importance of getting to the point where you can deliver projects in an efficient way. I better stop before I start ranting.
I think you made your feelings quite clear, but did you think that the £5 billion of infrastructure spending that was brought forward, did you think that was a reasonable a set of assumptions in terms of the ability to accelerate those then?
Well, I think most of those are in the sort of plans that we've already set out. So things like putting more resource into energy efficiency, that's a fairly straightforward thing to do. Accelerating plans already in the pipeline for electric vehicle charging is something else that we want to do, and we think that's fairly straightforward. And equally, rolling out broadband. Again, there's lots of resources available which can be put into that. It needs, again, proper planning, but it's not that difficult to move some of it around. And some of these monies were already in there. So the actual additional pieces, I think, are being put into places where those resources exist.
But will they even offset the things that were postponed because of coronavirus from the infrastructure spending?
So far, nothing has been, some planning has been put back because the people weren't able to do it while they were planning to work at home and all of those sorts of things. But almost all the projects that I can think of are still rolling forward, albeit somewhat more slowly in terms of their planning, in terms of, say, the investigation of geophysical investigation. You have to have people out there to do it. And so those things tended to be put back a bit. But although some things maybe have the gas got turned down a bit, it didn't get turned off.
And we've heard the Prime Minister talk about changing planning laws. So what changes in the planning laws do you want to see on the National Infrastructure Commission?
The National Infrastructure Commission, we haven't taken any specific views on planning. And indeed, we're not part of all of that. I have personal views.
Okay, your personal views then.
And so I've written about the need to streamline the way the local plan process works. I've written about the need to think more flexibly about the way we apply some of the tests to developments, need tests, viability tests, these tests, those tests, the other tests. We've created a monster, and I would be very keen to see that simplified. And you can see some of that in things that the Infrastructure Commission has looked at, say Cambridge to Oxford, Milton Keynes, and that side of things, where we looked at the need to accelerate bigger developments and the infrastructure piece around that. So how we make sure that we're planning at the big scale to get the infrastructure and the housing developments and indeed employment developments to be aligned is something that we need to pay a lot more attention to.
So in terms of house building specifically then, you think that planning needs to concentrate on more big developments rather than just deregulating the ability to build single houses?
Where there's an infrastructure requirement, then we need to think about the size of the infrastructure requirement and the size of the development. That's not necessarily to say that that's the only thing you should do. And indeed, when we looked at CAMCOX, our acronym, Cambridge, Milton Keynes, Oxford, it's not just about a few academics. Sorry, Hamish. It's not just about getting you to Cambridge, it's about having an effective labour market across the whole of the arc. When we were looking at that, we had a whole variety of options and optionality, including small extensions, larger extensions, and new settlements, and how the infrastructure could facilitate all of that. So it's all about creating, from our perspective, creating an effective labour market.
Thank you. Can I just bring in Lord Macpherson and just ask if there are any particular kinds of infrastructure spending that are particularly powerful in terms of multiplier effects at the Treasury? from you wearing your old Treasury hat, Nick?
Well, I think at the current time, I would want to focus most on transport projects. I mean, look, it's very nice to have new schools and new hospitals, but actually the Blair government put a lot of money into those areas. I think transport has perhaps not got as much money as it should have done, taking the last 30 years into account, and I'm probably partly to blame for advising that. But I would go for transport. Bridget's absolutely right. There are no shovel. I mean, shovel ready is the wrong term, but you need a plan, and you need a long-term plan, and it needs to be integrated. I welcome the move both under the Labour government and the Tory government to strengthen the infrastructure arm within government and to get better planning, but it does need to deliver. And I would want to see some sensible road building, but also some sensible road maintenance, because you can do that quickly, but you've got to manage it, because there is an issue of capacity, and if you just try and ramp up too quickly, it just goes in very rapidly growing costs, which comes back to the planning point. There's also an issue about the labour force. We're leaving the European Union at the end of this year. Just, it's going to be really important that we have enough skilled construction workers, because as I walk around London, I'm very struck by how many construction workers do come from Central Europe.
Sadly, my time is up. Thank you.
Could I thank you, Harriet? Before I go on to Andy, perhaps I could just ask Bridget very quickly. When Philip Hammond appeared before our committee a few sessions ago, he made the point, which I think Nicholas is also making, that you can put a lot of money or set aside a lot of money for infrastructure, but does the country really have the right level of capacity for these kind of projects in terms of construction businesses and skills and so on? Or do you think, from an infrastructure point of view, there's really a very significant gap and a problem there? Do you see it that way?
So I certainly think that you can talk about very large numbers for big infrastructure projects, and you cannot spend that all at once, and you shouldn't try. So you shouldn't try to spend more than a few billion on any individual project, and thinking about that carefully and allowing that long-term pipeline to be known about, so that companies have the willingness to invest. If you talk to any supply chain company, they will all tell you. When I sat on the board of Network Rail and I would go to supplier meetings and ask them what they needed, they said certainty of the supply chain, because that will give us the ability to train and invest. And once you've done that, then I think you can build that capacity. It's the stop-start which throws them. But also I think we've got to be willing to price things at a reasonable level. We've been very tight on pricing, and we think we risk manage those. We think we risk manage that very well. And what we've done is starve our domestic supply chain of the ability to build a balance sheet. And it's actually, at the same time, it's the balance sheet that enables you to carry risk. And I don't think government has necessarily understood that as well as they might have done. And it's, I think Phil Hammond said that we don't have those very large construction companies. We have quite large construction companies. What we don't have is companies with big balance sheets, which companies like Bouygues or Vinci on the continent do have. And it's enabling them to build those balance sheets, which I think will build which can be developed with a secure supply chain, a secure supply of projects, which will enable them to then take better risk and do better risk management themselves.
Thank you.
Actually.
Very interesting. Thank you very much. Can I go to Anthony now, please? I think you need to unmute, Anthony.
Right.
Yeah, that's it.
Okay, thank you, Chair. And I refer to the Register of Members' Interests, and I should also declare that Bridget Rosewell and I worked together at City Hall when she was Chief Economist, and indeed she did such a good job. I reappointed her halfway through. I want to ask about the second biggest tax measure today, the cut in stamp duty, but then ask for other measures. The government's got this package now, but the Chancellor made very clear that this was just one stage in the process. We have a budget and a spending review later in the year, and there may be other measures that he'll consider later on. So I'm interested in your ideas on that. But on the with stamp duty, first of all, coming to Bridget first, a 6-month stamp duty holiday is going to, the Treasury estimates it'll cost about £4 billion of revenue foregone. How effective do you think that will be in stimulating economic activity in the short term?
I think it will be effective. I don't think any of us really know how much. And one of the difficulties with these, the sort of models that we're all used to running around what would be an effect of a tax cut of any description, VAT or anything else, I'm not sure that the past is a good guide to the future at the moment, because what we've been doing is unprecedented in terms of supporting people's incomes. But we do know that this kind of complete stop to the ability to build houses and therefore keep that chain of house building and house moving going has had a big impact. And I think that sometimes the announcement effect, I was really interested in Nick Macpherson saying he'd become a bit more convinced that such effects can matter. It's all Keynes's animal spirits. It's something that just gives people a bit of confidence that they are able to go out there and do something. Will it work? I don't know. Does it have a good chance of working? I believe so. And if it does, then that actually would make a big difference to both people's ability to move and keep the labour market going, but also to the construction companies.
Thank you. Professor Lowe, what do you think of the cut in stamp duty for 6 months?
So I always think that when we think about will something work, we've got to think about what we're actually trying to achieve by doing it. And I think that's particularly important here. I think what Bridget says is right, that this will help the construction industry. I think will it actually, and will it help people moving house? I also think it will do that. Who do I think will actually benefit in the end? I suspect it will be current homeowners will be the ones who benefit. We see prices get these, when these things happen, the evidence is in the past, so I take your point that maybe not a good guide to the future, that we end up seeing house prices rise and absorbing a lot of the benefit of the tax, the tax cut. I think the one thing I would say on this is that stamp duty itself, you'd find it really hard to find many economists who would think stamp duty was a good tax.
Well, the IFS called for it to be scrapped outright.
Yeah, exactly. And I think, in this sense, the IFS is going to be kind of representing the view of 99% of economists. It seems a bad way of raising revenue, and we've just got locked into it. And the problem,
why do you think it's such a bad tax?
Because it restricts people's ability to move. So if I think about if you're a homeowner in one bit of the country and you want to move and you have a job offer in a different bit of the country, you're basically putting a transactions cost on making that adjustment. So I think that's basically the problem. You're restricting people's ability to adjust their consumption patterns or their living patterns. And I think that's a major limitation on labour mobility. So at the moment, when we think that the economy is having this need for structural adjustments or potentially need for structural adjustments, we'd actually want to have as much flexibility as we can to move labour to where it's actually needed. And this is exactly the sort of thing, a stamp duty itself is the sort of thing which will stop that happening or limit that happening.
Thank you. And coming to Lord Macpherson, what do you think of a stamp duty holiday? And should we abolish stamp duty outright?
Stamp duty is a terrible tax. It's a tax on transactions, it's a tax on mobility. And it's really sad that it's been increased as much as it has over the years. When Norman Lamont was Chancellor, you had quite a big zero rate band, and then you had a rate of 1%. 1% is not an offensive rate of tax, but once you get it up to 5% on, and I recognise this is a sort of southeast issue, properties of
12% for the highest ones.
At $500,000, it starts being problematic. I mean, it's one of my biggest regrets about the financial crisis. The Irish used the crisis to good effect. They lowered stamp duty and they introduced a very sensible self-assessed property tax. Property taxation in Britain is hopeless. I mean, and it's not going to improve. I can talk to every single chancellor. Once you start sort of mentioning property taxes, they begin to look at you as if you're slightly insane. Council tax hasn't been revalued in 30 years. It's the most absurd charge. I mean, obviously, we should restore the domestic rates and Schedule A on the imputed income of owner occupation. But if you try and explain that policy, even to politicians with PhDs, they think you're mad. So do I think it's a sensible policy right here, right now? It's not. Look, it's straight out the playbook of recoveries. Norman Lamont did it, and Alistair Darling did it. This one actually is a lot more generous. I think Alistair just increased the threshold from 125,000 to 175,000. So it will benefit relatively well-off people in the southeast. That may be a good thing. And I mean, one of the reasons for wanting people to move is that they will then go out and buy new kitchens and household products, and that comes back to the animal spirits effect, which I think is the case for this measure. But it's time limited, and as either Hamish or Bridget said, the main beneficiary will be the person selling. Actually, we need higher house prices, like a hole in the head. Actually, what this country needs is lower house prices, but then the British people who own homes and the politicians they elect are addicted to house price inflation, and I don't expect that to change anytime soon.
Okay, thank you. So just coming to other options, we've had the cut in stamp duty, the cut in VAT, discounts on meals out for August. There will be another budget in the autumn. Are there other things you think should be done? There had been speculation about cuts in national insurance, cuts in we mentioned the car scrappage schemes. But what else would you like to see? Coming to Bridget first, and if you keep your answers short because we're running out of time.
Okay, so one particular idea I'd just like to get out there, which is a replacement for the European Investment Bank, and potentially something like a DARPA, so an organisation whose job it is to spend on new stuff, with a proportion spent on SMEs. I think that this is one of the things that could help create confidence.
Okay, that's a very concise answer. Professor Lowe.
So quickly, one thing I don't think we should be doing, and then maybe I could say what I do think might be better. I don't think we should be doing income tax rebates the way the US has done and the way other countries have done. So income tax rebates, they give money to people who are across the board, and a lot of it's not actually spent. And so that seems to me a pretty a poor measure to put in place. I would be much more enthusiastic about a wage subsidy, or something which was more directly trying to help employment across the board, rather than in these kind of targeted ways which we are currently doing.
Which in fact he obviously did announce today, two different, the job retention bonus and the Kickstarter.
Yeah, but I think they're very different. So in some sense, the job retention bonus is a very different sort of scheme, because a job retention bonus is for people who've been on furloughed. And so those are people who are explicitly in sectors which have been badly hit, trying to protect their employment. A wage subsidy, which is more general, would allow reallocation to where you actually need more employment. So I think there's a big difference between the job retention scheme that's in place and a more general wage subsidy scheme. So the job retention scheme, I think it just prolongs the time until the adjustment will take place.
Yeah, thank you. And coming to Nick Macpherson, if you're back as permanent Secretary of the Treasury, what would you be advising Rishi to put in his next budget?
Well, it's slightly countercultural for this government, but I think I'd be advising increasing the benefit rates within universal credit, because people at the lower end of the earnings distribution have a higher propensity to consume. And the great thing about universal credit is it does seem possible to adjust it very quickly, whereas it wasn't in the old days. And it helps.
They have done that during the crisis, increasing £1,000 a year.
So I think the working age poor took a disproportionate hit during the austerity era. If austerity truly is over, as the Prime Minister claims, I think this is a time to put that right.
Okay, thank you very much. I'm out of time.
Okay, Anthony, thank you. And turning now to Felicity, please.
Thank you, Chair. My questions are on household savings. Perhaps first I can come to you, Nick. And first of all, I also want to congratulate you on your choice of title. Earl's Court is actually in my constituency of Kensington, so a great choice. But clearly we have seen an increase in household savings here at a time when government debt is ballooning. Are you concerned about that juxtaposition? And also, is there anything good about this increase in household savings?
Well, I suppose in one sense it's the flip side of the deficit. I think it's good there's more savings out there because someone's going to have to buy all this debt, and I dare say pension funds, life assurance companies will play a part. This country has a chronic propensity to consume, both in the public sector and the private sector. And so it would be nice if we entered a brave new world of higher savings. Maybe that would help generate more investment. But making a Keynesian point, the risk of people, the paradox of thrift, as I believe it's called, is that actually if everybody starts saving at this point and continues savings, then you'll get less economic activity. My guess is that much of this saving is enforced. It's not that people are wanting to save, it's just it's been impossible to spend their money as the economy opens up. And that's why actually, the thing which will have the biggest impact is successful management of the coronavirus. And the more confident we will be, the more we will start spending.
Thank you. Hamish, can I turn to you? I know that you've written a paper on this. Can you give us an overview of your thoughts as to how much of these savings are voluntary versus involuntary, just to pick up on Nick's point, and also how you see the increase in savings falling across the country in terms of demographics and also income groups?
Okay, so there's a couple of things there. So one, I think just pick up on something Nick said to start with, is that savings from an individual perspective is not a bad thing, because it's just deferred consumption. So the fact we see savings rise is not necessarily going to be a bad thing from the individual's perspective. What we see happen across the different recessions, the last sort of 3 recessions or so, is we have seen these spikes up in savings each time when the recessions hit. And then we've seen when we've reached the end of the recession, when the uncertainty is resolved, we've seen a very, very fast decline in savings rates. And then that speaks loudly to one of the things I've kind of pushed quite a lot, which is the spike in savings is really being driven by uncertainty in these previous recessions. People are unsure about their job future, they're unsure about what their prospects are going to be, and so they're saving against that. When they then reach the end of the recession, the uncertainty is resolved, they then start running down the savings they've got. So that does speak to the being pent up demand. I think the point you make about, or the question asking about this kind of how does this differ across different individuals is really important, because I think that there's two key different types of people. There are people who have had no income loss and they've just cut their consumption. And we can see in the data we have that about 20% of those people with no income losses have still cut their consumption. And that looks to be like it's a kind of forced saving that's going on. But we see much larger cuts in consumption by people who've had the earnings losses, who've had the income impact. So I think that for those individuals, it's not that there's some pent-up demand for consumption which is going on and their savings is reflecting the fact they've got pent-up demand and they're not able to spend the money. I think for those individuals, it is much more that they're concerned about their jobs, they've lost income already, and so they're cutting their consumption in response to that. And I think that's where really that there's 2 very different sorts of measures you'd want to put in place if you did want to get people to be spending more and saving less. The put measures in place to help people who've got the pent-up demand because they've been forced to save are very different. They're the ones who are much more responsive to the cuts in VAT or to stimulus packages. The people who are suffering the income losses or in sectors where there've been job cuts, I think it really is about reducing their uncertainty as a way of actually getting them to start spending more. And I think it's important when we're thinking about how do we understand that savings behavior that we make that distinction between those two groups. I mean, the only drawback on this is at the moment we still don't have good enough data at the micro level, the individual level, on who's actually cutting the most and where are they actually cutting their spending.
So just addressing both of those groups, the first group, you stimulate demand there, as you said previously, by accelerating their expenditure. But if we look at the second group, where their income has fallen off and they are concerned about their prospects, how do you stimulate demand there if we cannot provide them assurance that they will definitely have a job in a year's time, for instance?
So it's clear we cannot provide assurances about having a job. I think we need to provide assurances that their committed consumption is going to be maintained. So things like their mortgages are still going to be paid, their rent's still going to be paid. I think that's where Nick's suggestion of universal credit and building on what's already been done is a good one, because that's where you actually end up offering that safety net of support. So I don't think it's about guaranteeing jobs or people being sure that they're going to have jobs next year. I think it's about saying or making sure that people are they understand that if they do lose their job, they're not going to lose everything. And I think that helps. So there's a different sort of uncertainty, but I think that's where the mitigation would come through.
Thank you. Bridget, can I turn to you? Are you concerned about the increase in savings, and how would you stimulate consumption?
So I'm with Nick in the sense that we're an under-saving country, and therefore getting people into a habit of doing more saving isn't a bad thing. Mm-hmm. And even it will take time for spending patterns also to react to the kind of structural changes that we're likely to see, whether that's about a continued social distancing that we're going to have for some considerable time, but just people have got into different habits. I'm sure Hamish knows more about this than I do, but it takes about 3 weeks, apparently, for somebody to get used to doing something a bit differently. And we've had 3 months. So there's been a lot of changes in behaviour about how you get stuff delivered to you, where you get it, all of those sorts of things. We don't know how much of that people have felt forced to do and how much they've actually now think, oh, well, actually, that's quite a good way of doing things. It's a bit like finding a different way to go to work in the days when you went to work, and then thinking, oh, well, I'll use this new way rather than going back to the old way, even though the old way is now becomes available again. So we know that stuff will happen. We don't know how much. And therefore, some continuing savings flows while during that adjustment process, people will be uncertain, and that will mean they save more. That's not necessarily a bad thing, because it will help to phase in some of those changes. What, of course, is a problem, and that I think comes back to the different ends of the income distribution, is families for whom that saving that they're undertaking because they feel they have to is very much undermining their family finances. And I think that is the bit where universal credit might be more relevant, not my area of expertise, and where we really need to think about that end of the income distribution and people whose uncertainty is leading them seriously to cut back on things that they actually ought to be spending on. But for much of the income distribution, a little bit of saving, very good idea.
And I've just got 1 minute left. So can I just go back to Hamish on one final point, which is about age distribution of savings, because savings are more likely to be held by older people, but older people have been recommended to stay at home and to shield, whereas younger people less likely to get the virus, more likely to be out and about going to restaurants and pubs, but not with the same level of savings. Do you think that there is an argument here for some sort of targeted age group stimulus?
So on just one general thing about savings, I think when we talk about savings, we're talking about so many different things that it's a very hard thing to kind of understand what we're really saying. If I think about people who are in their late 20s or early 30s who they don't have liquid savings, but they're likely to have highly leveraged in terms of having housing. And I think that when people are older, when they're retired, a lot of that savings pattern has completely changed. So I think it's very difficult to make it a case that we're talking about the same sort of savings at different points. That's a different point from your point about the age-related stimulus package. I'm always very wary of these sorts of things because the heterogeneity we see within groups of a particular age is in some sense often as great as we see across different age groups. So if I look at people aged 25 across the income distribution, their behavior is just so completely different that I think it'd be very hard to have something just targeted on them. And similarly with pensions, I think if we go back to the time of the Beveridge report, if you like, the pensions were much more homogenous group of people than they are now. And I think that for us to try to think about targeting things on pensions as a group, I think it's a mistake, because I think that pensions as a group are now not one group. It's a huge variety of abilities to mitigate and abilities to spend within that group.
Thank you.
Great, thank you very much, Felicity. And now going to Siobhain, please. Sorry, Siobhain, you need to unmute, I think.
Thank you. It's been a bit of a trial getting to this point, but just questions for Bridget, looking at the work of the Infrastructure Commission and the nature of capital spending given the coronavirus outbreak. Have the priorities of the National Infrastructure Commission changed in the light of the coronavirus crisis? Should the National Infrastructure Assessment now have a greater emphasis on social infrastructure, such as housing, schools and hospitals?
Okay, well, there's two slightly different questions in there. So we, after all, take a long-term view. Our job is to look forward over 30 years for social infrastructure assessment. And we're currently in the process of gearing up for the work to, as the input into the second of those, which would be published in 2023. So we're sort of in that planning stage. And we will obviously be thinking about, well, all sorts of scenarios, but we tried to generate something which is likely to be robust to a number of outcomes. So, for example, in the first one of the things that we said is that the investment, which is a bit of a no-brainer, no matter what happens in the economy, is investment in broadband. And I think that was shown to be absolutely the correct line to take. We've also said that we imagine in most scenarios, we think more electric vehicles, net zero, all of those things are going to be important. So I don't think that we should be making immediate, in the context of that long-term picture, we'll be looking to see whether we should be thinking about a broader range of scenarios or a different way of thinking about our scenarios. But I think the general stuff about saying which things are going to be worthwhile, pretty much whatever you can imagine, which things are probably worthwhile in most circumstances that you can imagine, and which things are a bit more of a bet, depending on how things emerge. That's that last one that we might need to think about a little bit more, depending on what sort of future over the next 30 years might emerge. But that's our job, is to think long term. So I don't want to do too immediate a reaction and get it wrong. But one thing I might say is that so far, at any rate, I don't think any of us on the Commission are taking the view that we think, for example, that people aren't going to live in cities any longer, or that agglomeration, that the productivity benefit of cities has gone away. In fact, actually, I think, per my personal view, is that the importance of getting together in the face of something new is really, really important. And we need to find ways to do that. And ways where we can all get together and be a bit more interactive with one another than this process, however efficient enables us to be.
Thank you. You kind of anticipated my next question in your answer there. You know, because a recent YouGov survey showed that 61% of employees would like to increase the frequency of remote working, and 32% thought there should be a transition to permanent home working where possible. Meanwhile, my particular interest, 700,000 children have struggled to do any schoolwork at all because of having no access to the internet or not having the necessary devices. Does this unplanned experiment in remote working, learning and communication indicate that the government should reassess infrastructure priorities? And if so, how? And cheekily, would you support our cross-party bill to get internet connection to those 700,000 children?
I think everybody, absolutely, in the Commission, we've supported extending internet connections, definitely, and high quality and high bandwidth as well. I'm really interested in these surveys and how people respond to them, because it's very interesting across all kinds of age groups and across all kinds of working patterns. What I'm seeing is people increasingly fed up. So, and people increasingly wondering about how they're going to deal with new stuff. So I think everybody would like more flexibility. I don't get any feedback that says I want to be doing a long commute every day. Nobody is saying that. But I think everybody is also saying we are social animals and we do need to be getting together. And as time has gone on, that reaction has become stronger. In my bank, we've reopened the office now. We closed it completely. And we have people clamoring to come to work so they can enjoy working with one another and talking to one another. And I really, really think that is actually quite important. The public transport implications of that, as people come into work less, but when they do come, they all want to come together, I think is something we are going to have to think about. But again, it's not something that we should just jump into too carelessly. Really got to wait, I think, a little bit and see how this begins to develop, how people's preferences begin to pan out. And we certainly shouldn't allow people just to say, oh, well, I can now save money on my premises. Because I don't think that's going to be the right answer. And I think it's very easy to work at home if you know exactly what you're doing, why you're doing it, how you're doing it. But if anything changes, then it's much, much more difficult. And what's going to happen in the next 5-10 years, things are going to change. And how are we going to cope with it? And that's what we need to get together to discuss.
Okay, the other huge impact for me as a South London MP is the issues of housing and access to housing and the dreadful condition that so many people live in. The economic recovery plan focuses on social infrastructure such as housing. How does the impact of investment in social infrastructure differ from that of physical transport infrastructure, for instance, in terms of creating jobs, increasing productivity, and also providing a stimulus to the economy in the short run?
Golly, big question. So social infrastructure houses and schools and things is actually not in the remit of the Infrastructure Commission. It's not our job description. So just as that as a caveat. And therefore it's not anything that we have looked at. Anything in construction tends to operate in the same kind of way and include the same skills. Obviously, smaller scale things can be dealt with smaller scale companies. So it gives you a better range. I think that the whole question of what you mean by that social infrastructure and the extent to which you want to include things like housing in it and schools and hospitals, the whole way, I've said already in answer to somebody else, my own personal opinion is we've made all that stuff incredibly complicated and very developer dependent, and we really need to think that one through. But it's not my job as a commissioner, but it's certainly something I think about and I've written about elsewhere.
Thank you. Finally, what scope is there for increased capital investment after this crisis, given that the government has already committed a substantial amount to HS2?
So HS2 is in our fiscal remit plan. So I think there's two bits. So the fiscal remit for the National Infrastructure Commission, which is the amount of public spending we should live within, is 1 to 1.2% of GDP, which when you think about it per year, actually over time that adds up quite substantially. And that could be increased. But even with that, it still allows a fair amount of leeway over time as different programs develop. So it entirely depends on the kind of allocation of funds that people want to put into infrastructure.
Okay, thank you.
Thank you.
All right, thank you. Could I thank you very much, Siobhain. Could I go to Rushanara now, please?
Good afternoon. Thank you very much. I'm going to start my questions with looking at the differential impact of COVID on different groups. And I wanted to start off with a question to Professor Lowe, given your work in this territory, and obviously other commentators who've talked about the impact on women, ethnic minorities, poorer people, and so on. And there's a trend in recessions; they tend to be often the worst hit. Could you talk us through what sort of interventions would be particularly beneficial for those groups, and also reflect on today's announcements and which ones are going to be particularly helpful to those groups of people who are affected?
So I start to think about how different groups are impacted. I think it's helpful to think about the impact on earnings as distinct from the impact on income and living standards. So if I think about earnings as being about what's the impact on jobs people have got and their employment and so on, and then the impact on their income or living standards is really about how well are they able to mitigate those shocks. I think it's really important to distinguish between those two things. So I can imagine that there are, well, we know there are people who are heavily affected by the earning shocks, but who are able to mitigate those shocks because they've got access to savings, they've got access to borrowing, or they've got access to family. So I think it's important we don't just think about what's the impact on earnings, but we also think about how well people are able to mitigate those shocks. And I think what we see is that people's ability to mitigate shocks is very different across the distribution. So I think one of if I think about the gender differences, just as a kind of starting point, so we don't find, if I just did a kind of raw split of what's the impact on earnings across men and women, we don't find that much of a difference. That's not where the difference is really coming. Where the real difference comes is when we split by whether you've got single parents or you've got couples, and then you do see a much bigger impact. And so I think that my concern about some of this is that we see that single parents are being much more of a cost because of the caring responsibilities, and also they're more likely to be requesting furlough, and they're more likely to be reducing their hours of work. And so I think the question then is, how well are they protected, given that's what's happening? And I think that for them, what's important is coming back to how generous is the tax credit scheme, how much we actually do in terms of childcare facilities. Are we actually thinking about how to mitigate those direct losses? So I think that's one of the key things which we are finding in terms of our impact, in terms of gender. But so I think one thing I want to stress is it is more nuanced than just saying women are being more impacted than men. I think there's a big difference according to
certainly, of course, it's a given, isn't it, that there's a class differential and so on as well, and the same will apply. There'll be similar issues with other groups. So can you just list quickly which other groups, taking into account the nuances, are particularly hit hard by this crisis?
So
I want to move on to Lord Macpherson and
sure. So to be very quick then. So I think that the other striking things are the people who are in the bottom income quintile and the second income quintile are the ones who are most hit hardest. The other thing we find is there's a big ethnicity difference. And there's a big ethnicity difference in particular in furloughing. So we see that if ethnic minority groups are more likely to be made unemployed rather than furloughed. And so that was one of the kind of striking things we found. Right. So I think that it's that those are the kind of main groups which I think of as being affected. It's single mothers, it's the bottom two income quintiles, and it's ethnic groups. And there's some, of course, there's a cross-cutting thing across occupations. Occupations matter. But in terms of the individual characteristics, I think that's what's important. It is those characteristics.
Great, thank you very much. Lord Macpherson, earlier on you talked about increasing support in universal credit, and yet last week we saw the government introducing sanctions again. And so in terms of what you might have done, advise ministers to do if you were still running the Treasury, what do you think, given what you've heard about the impact on certain groups? And also, let's be clear, we've seen very high prevalence of deaths. Certainly in my constituency, fourth highest standardized death rates, the highest among Bangladeshis, as well as other minority groups. And we've all been seeing effects in our constituencies. And you mentioned austerity and certain groups having to pay the price of it, not in your words, mine. So what would you have advised ministers to do this time that would be different from, say, the Osborne Chancellorship in terms of addressing and learning from what's happened and how we move forward to tackle these differential impacts on certain groups in our country?
Well, mean, the first point I would make is the point about implementation. Back in 2009, I think it's quite possible that the Browne government would have wanted to do something about benefits, but the implementation lag was so long, 6 months to a year, that it just wasn't seen as a particularly effective instrument of demand. That seems to have changed with universal credit. I've been really impressed by the speed with which it's impossible to channel money through it. So, I mean, I just have this sense that the elderly have had a very good run on social security in Britain over the last 10 years. Those of working age, particularly those with larger families, have taken quite a big hit. Now there may be wider public policy reasons for doing that, although I'm still struck that when I signed on back in 1978 as a teenager, I think I got more benefit then in real terms than you would get now. So I just think, as part of a civilized society, it is worth looking at that. But as a former Treasury official, obviously, I would be worried about the cost and embedding extra costs. This isn't something you can mess about on a temporary basis.
Sure, but I think, just picking up on Professor Lowe's points, it's single parents. Now, it's politically, for some, difficult to, some find it difficult to support single parents. I mean, there's a long history of the way single parents have been treated. Childcare hasn't featured in today's announcements that I can see. What specifically do you think the government should be doing? Looking towards a later statement, what's been done today is many of these interventions are welcome. What else needs to be done in order to mitigate the 9% potential unemployment rate, possibly up to 15% if we have a second wave? And what would you be looking for in a later statement? I think it would be good to have some concrete suggestions on what else should be done. In the current climate, what's been certainly useful is interventions in this committee from experts or former permanent secretaries that can be fed in to our ministers and so on. So it'd be very helpful to have a list. What would you do? You've mentioned some of those things, but some more specifics on what needs to happen to mitigate this big challenge that's coming.
Well, I think childcare is a really important issue. There are a whole lot of reasons for that. I'm embarrassed to say that it's 4 years since I left the Treasury, and I no longer am an expert in the details of universal credit. You know, if we were back in sort of the year 2000, when I was in charge of welfare reform in the Treasury, I would have been seeking to increase the childcare tax credit. But I don't know whether that exists anymore within universal credit. But childcare is expensive. I think it's fair to say that the COVID crisis has hit parents with caring responsibilities pretty hard, especially if they are living in, relatively small units of accommodation. So I do think, as a matter of social policy, but also actually because I still firmly believe that work is the best route out of poverty, for employment policy reasons, I think this is something which needs to be looked at, and maybe as part of the budget in the autumn, the Chancellor will act.
Bridget, did you want to add anything on these points? If not, I'm going to move to you for my next section.
It's not my area of expertise, but I have looked at childcare costs in the past, and I think that is a problem generally, and particularly in London, in order to improve people's ability to work, and it's something that we looked at when I was at the GLA.
Okay, well, thank you very much. So I'm just trying to...
Sorry, Hamish, were you trying to quickly...
I was just going to come in to say that I think what the striking difference is with the response in Denmark and in the Scandinavian countries in terms of their support for childcare. And I think we should take a lot of lessons for how, in those situations, actually enabling people to get back to work, offering long parental leave, and yet then having heavily subsidized return to work, is shown to have these long-term benefits in terms of employment. That was my only point.
Brilliant. Thank you very much. So moving on to the theme, continuing with sort of work and employment, Can perhaps Bridget, you could start. What's your overall sense of where infrastructure can be, job-rich infrastructure can be encouraged? You've talked to, I'm not going to use shovel-ready, but where are the areas where, there have been already references to areas where you could intervene. Where can we have infrastructure where we're going to boost employment?
I think
And
we've already
what
mentioned
for now. You've mentioned a few, but are there any additional ones you wanted to?
Yeah, I was going to say, I think we've already mentioned generally supporting the construction industry where it is possible to respond best. But I think we also need to think about these in the longer term as to how infrastructure investment is supporting productivity growth and economic growth more generally by both by connectivity, but also improving our route to zero carbon, for example, and investing in the potential of hydrocarbons, honestly, hydrogen and hydrogen potential for decarbonising gas. So that is a potential both for high job richness in the transition, but also improving our long-term prospects as an economy. Anybody who is old enough, as I certainly am, to remember the transition to a North Sea gas and a huge replacement of boilers and so on, which was an incredibly job-rich thing. There was a period where solar panels was also a very job-rich infrastructure movement and indeed moved to zero carbon. Lots of firms popped up to implement that, and it was spread all over the country as well. So it was also very much able to respond right up, not just in some parts of the country. So those sorts of areas, I think. Electric vehicle charging is another implementation. Rollout of broadband, full fibre to the premises. All of these are both job-rich in their implementation. Plans already exist, and indeed they create a better focus for the economy long term.
So one more for you around this, which is, have we got the correct architecture for training, apprenticeships, skills development in the context of what was mentioned earlier by the former PermSec about Brexit? Some of my colleagues won't like me mentioning the B word, but the reality is London, for instance, one example, we rely on a lot of EU nationals in the construction sector. Are we ready for that? And will today's announcements on investment and support to young people actually help or hinder the apprenticeship program? Because why would employers switch to the Kickstart program, which I welcome, but why would they switch to the Kickstart program would they not switch from apprenticeships to Kickstart? Are there some unintended impacts that could be negative, or is it all?
There may be. To be honest, I haven't really looked enough at the detail to know whether that's a really serious risk or not. So I can't really answer that question, I'm afraid. I would say, however, are we ready with training? No. Have we ever been ready with training? I mean, my whole career, we've been spending time saying we don't have a good enough vocational training system. I can't really answer the question as to why in all that time we haven't been able to. I wish I could give you
students of yours.
I wish I could. I don't know how.
These ex-students of yours who went off to be ministers.
Yeah, clearly that was
okay. So we've got to do more. What ahead of a budget statement, what would you expect or would hope the government could do very quickly to meet that challenge? Given everything's we're having to do everything at a speed of lightning. The Treasury's demonstrated it's able to speed things up and do things faster than ever before. So perhaps for you and Lord Macpherson, what else would you expect or hope they could do to speed this up? Because otherwise, infrastructure is all very well, but if you don't have the workers, if you don't have people ready for it, then it's going to be pointless, isn't it?
Well, I think there are two specific things you could do. Firstly, you can really put some welly behind the colleges of training in specific areas in infrastructure like railways and so on that have been set up, and really give them some visibility and work hard, as I'm sure some other people do too, and I try to support STEM education in schools and get people into those at an earlier stage, improve the visibility of women in engineering, all of these things, we need to, there's no one thing, there's no silver bullet for this. If there were, we'd have found it by now. Every aspect of this needs to be supported, and we need to make sure that those kinds of careers are seen as valuable. You go to Germany, being an engineer is a good thing. France, Germany, an engineer is a good thing. Here, what's an engineer?
No. Okay, great. Well, thank you very much. So one question each to well, I'll start with Professor Lowe. If you could, just anything else you want to add, if we look at the scale of what we're dealing with and the potential for unemployment, obviously 1 million young people who face unemployment by the end of the year. And despite the current program today that's been introduced, it's for 6 months. It's comparable to the Future Jobs Fund, but some would argue we need something much more ambitious for a longer period of time for young people. And then you've got the overall unemployment rate. What else would you propose happens in the context of potentially a bigger, another health crisis later on in the year if social distancing doesn't, if we have similar spikes that other countries are showing signs of?
So I think a couple of comments. So one is, if I think of why we've got such a problem with the young in unemployment is because of the narrowness of where they're being employed. The kind of focus on the hospitality sector, the focus on the retail sector, that's where we're hit. And so when those sectors have been hit, we've seen this implication for young individuals. And so we're trying to, and I think the measures we put in place are trying to prop them up in those sectors. And I think we have to find ways of shifting them across sectors. And the problem is, this is not a solution which is going to be achieved in 6 months. It's back to Bridget's point about why have we ended up in this situation we're in now. It's because we haven't, every time this comes up, we're saying, oh, well, it's a long-term issue training, and we're not actually serious about training the bottom 50% of the population. And so I think that I don't have a magic solution for what we should be doing at Christmas time when this all kind of ends and when it's all going wrong. But I do think we should now be making that commitment to a 5-year plan on how we're actually going to stop the dependency of young people on the hospitality and the retail sectors. And I do think that one of the things I would not have done was to try to bolster hospitality and retail in the way that's happened, because that doesn't help with the sort of realignment that we'd actually want to happen with younger individuals. And that's why I think having a more wider wage subsidy scheme would actually have a much more beneficial effect in allowing us reallocating towards sectors which have got more long-term future with genuine job progression.
Yeah. So you would have put wage subsidy instead of Kickstart today if you were
No, so the Kickstart program, and we know the evaluation from when the Labour government did it, that actually this was a pretty effective short-run thing. It's not, and it did have this ongoing benefits. And I think so. I completely in favour of the Kickstart program.
You might put in this other idea as a second stage, as the sort of next step, if you like. Okay.
Exactly. And instead of the coronavirus, the ongoing furloughing job retention payment scheme.
So Lord Macpherson, you get the last word in my section. One of the concerns is that some people would say, even a Labour MP might say, the Treasury's response has been much more rapid. It's it's been responsive to some of the challenges around, for instance, introducing the job retention scheme and others. Credit where it's due. It's been quicker to respond to some challenges. We have lots of criticisms, of course, about other areas, which you would have heard. But there's a disjuncture between what's happening in health and the mismanagement, actually, in terms of testing, PPE, tracking, and these are interdependent to economic recovery and what we do. To what extent is the health response and pandemic response continues to be the sort of weakest link to the government strategy? And what do you think we need to learn from that experience to ensure that poor handling of the health crisis, especially if we get a second wave, doesn't undermine the effort to recover, and we don't go back into lockdown, we don't go back into retreat in terms of trying to recover on the economic side?
Well, I can't really speak for the Department for Health, but I think that the lesson I learned from 2008, 2009 is, and in one sense, it's very lucky. It's not lucky because no one will want this to happen, but it's lucky that the Treasury, that the people running the Treasury, Tom Scholar and so on, were at the heart of that crisis. so they have the experience, the knowledge to act quickly, and also the evidence base. And I think it should be incumbent on all government departments which go through really difficult times to really try and distill the knowledge and then embed it. And I hope even now the Department for Health, I know there have been some missteps, but they've also done some good things. And I hope as they're going along, they are learning the lessons. And you know, I don't want to get into some wider discussion about the civil service, and I was very impressed by Mr. Gove's speech the other day, which showed remarkable knowledge, not least of Gramsci's writing. You know, it's really important that that Mr. Gove and others practice what they preach. Expertise matters.
Mm.
Great, thank you very much.
Good note to end on. Thank you very much, Lord Macpherson.
Okay, thank you. And going finally to Angela, please.
Thank you very much, Chair. And I suppose this one's initially for Nick. Do you think that reconstruction banks, potentially even regionally based, might actually help to begin to switch the economy away from its debt-fueled consumption characteristics towards a more balanced approach that might make us more sustainable, both socially and environmentally, going forwards?
Well, they could do. I should be clear, I've always been quite sceptical about reconstruction banks or regional banks or the government getting into banking, because generally in my experience there's only one set of people who are worse at banking than bankers, and that's ministers and civil servants. So I
suppose if you look at the way, Nick, that investment has been skewed since the Big Bang down towards London and the southeast, all political parties now finally recognise that that we probably should have had a much more robust regional strategy. We had one when I was in government, which stalled in 2010 with the abolition of the regional development agencies, etc. And so now we've not got enough of a structure to try to get those decisions made locally. So I suppose I'm looking to see what you think. If it's not a reconstruction bank or a fund, what can we do to ensure that we're not going to get the same bias in Whitehall away from investing where it's really needed? Sorry,
I think I may have been unfair to your original question, because I think you definitely need funds, and you know, you may want to and venture capital can play part of that, and you may want to develop things which increasingly do look like banks. The government's in favour of greater devolution, as am I. I think England is, and actually for that matter Scotland within its own terms, are very centralised states, and that centralisation is anchored in London and the southeast, and I think that has had undesirable consequences. The challenge, I think, is how do you create the democratic structures which go with devolution, because just simply decentralising to a bunch of bureaucrats doesn't actually take you very far. I mean, you'll recall we had some regional health authorities, but to whom were they accountable? And yet, whenever voters are given a chance, they're not very interested in regional government. I do think, you know, there have been some positive developments, the sort of wider Manchester city regional structures, which I think have huge potential. And I think if we can build on those, and there does seem to be cross-party support, and I think that is essential, because you really don't want people sort of rearranging the deck chairs every 5 to 10 years. If you can get some cross-party consensus behind greater devolution of regional funding, I think that can only be a good thing, because and it needs to be done at the sort of city region level, because actually it tends to be cities which usually combined with really successful universities, and there's some really wonderful universities across the north of England, which are the drivers of skills, economic activity, and so on.
A bit of light at the end of the tunnel, finally, there, Nick. I wonder whether perhaps, I don't know whether, Bridget, this might be one for you. I'm not sure, but the Treasury's been talking about Project Birch, which is their strategic recapitalisation programme for perhaps highly indebted companies that have suffered in the crisis, but there was no sign of any announcements about that today. Do you think that some kind of vehicle like that to try to shore up some of the larger companies with high levels of debt is a good idea, or do you think we should just let them go?
I think some of them will have to be supported, and I've no doubt that the Treasury is working hard to make sure that that's being minimised. Whether that ends up with some kind of, if you like, a bad bank, which after we discussed intensively in 2010, but on rather different grounds from this, where we're talking about trying to support entities which are shown over time, and I think it's the over time bit that, you know, shouldn't be rushed into, over time are likely to fail, and how you're going to manage that workout, which is always the biggest problem. It was the biggest problem in the 90s, it was the biggest problem in the 80s too, for that matter. I would like to come back to some of the comments about devolution.
Yeah, I know you're pretty sceptical about it, aren't you? You're pretty sceptical about.
Oh, no, not at all. And I think that devolution, particularly around city regions, but also more broadly, is really important. We do need some bigger institutions, and so at the Infrastructure Commission, we've been, we think a replacement infrastructure bank, I don't mind what you call it, but a replacement for the European Investment Bank is actually going to be really important. The forward funding stream that you need to make sure you can get the infrastructure in, which will then support subsequent development and big housing development, is really important. But I think we need that to have a regional or a local dimension. I think that, if you like, the old region.
Do you mean a democratic dimension when you say that, or do you mean just? Yeah.
Absolutely. So that where metro mayors are really important. I think the original way we did this, with regional offices run through Whitehall and examinations in public into getting completely incomprehensible plans, really took us in the wrong direction. That's one of the reasons why regional assemblies are just thought to be a sort of a bit fake, if you like. I think we need to show that there are real powers in local government and real funding for those powers, and power over what you can spend. That means Treasury has to be willing to take some risks that it has largely found itself very difficult to take. And so my big point would be, is you have to take a risk that devolved organisations and devolved authorities will have the capacity to use that. And I see we've been working with a variety of cities, and it's really interesting that as they get more confidence and begin to be given the opportunity to think through some of the things they could do, that they're building their own capacity to do it. And that's the investment that we need to make. And
do you think therefore also that obviously local government finances being changed, and at the moment it's a very, very centralised structure, and council tax is very, very highly leveraged and not a very useful tax. Do you think that it might be a better idea therefore to devolve some of the tax revenues that are currently disposed of centrally much more down to local authorities?
Well, my own opinion was certainly I was encouraged at the outset by business rate localization, and then when you looked at the detail, it was very weakened. So again, that's a place where we need to be willing to take more risk, but also to allow local authorities to vie between different budgets, rather than this has come from this stream, so you have to spend it there, and this has come from this stream, so you have to spend it there. We incredibly make it very, very difficult for authorities to work to their own local conditions, and I think that's a big weakness.
I think there's a shortage of finance generally, even with the metro mayors. I think that they were granted over 30 years the same amount of money that was lost in cuts in the last 10. And so there has to be a way of capitalising them and giving them more say, I think, if they're going to be asked to be effective.
Well, the Infrastructure Commission has had a whole stream of work around cities and the support of cities and the sorts of funding and infrastructure funding that they ought to have. Obviously, we don't say anything about the consumption part of it. My own personal position is that needs to be more flexible as well, but certainly around the stream of infrastructure funding for cities. And the government has moved in that direction. We'd like to see that. We'd like to see that done more.
Professor Lowe, do you think that there should be a more strategic sector-specific approach to different companies in the aftermath of the crisis? For example, aerospace, which happens to be extremely important in the Northwest and is very high skill, high value added, high export kind of sector. Again, absolutely no mention whatsoever of that today, and yet they're in, particularly the civil side, in very, very straitened circumstances. And other countries have supported their aerospace sector with big loans and packages.
I think so. My view on this is I think it's very difficult for us to predict what firms are still going to be in business in the private sector in the next couple of years, and it's very hard to see why it's the right way for the government to be spending its money to be supporting particular industries in that way. I think we should be focusing on supporting people rather than supporting industries and making that our starting point and then seeing what follows. I think there's real danger with supporting industries or supporting companies that we end up supporting shareholders, we're maintaining shareholder prices, rather than thinking about actually supporting workers or enabling them to retrain or move. I mean, if I was thinking about aerospace in particular, it seems it's actually an opportunity for us to change the way in which we travel and to change the way in which we're doing things, which means we shouldn't have the same need for aerospace, the airport sector and flying as we have done. I mean, if you think about, it's not sustainable for us still to have flying in 20 or 30 years' time with the climate change. So it's hard to, it seems like an opportunity.
Change unless you have innovation in the vehicles themselves to make them more climate friendly, perhaps.
Sure, so there could be that sort of innovation. But if your specific question is, do I think the government should be supporting the airplane sector over the next 2 or 3 years? I think that's going to end up supporting the holders of the debt of the airplane sector and the holders of the equity, as opposed to actually helping the particular individuals who are working there.
Okay, and you were saying earlier, Nick, that you were sceptical about local regional banks. Do you think that there's any other structural innovation that we need so that we can begin to make this move towards rebalancing our economy? I mean, we talked about it when I was a Treasury Minister. It seems not to have been achieved by this government, and now we've got the Chancellor exhorting people to spend when we normally spend our time worrying about the savings ratio. He seems to have made a decision to reinforce the dependence we have on consumer spending rather than, say, for example, manufacturing or any of those other things. Do you think there's any structures that we could be putting in place or maybe strengthening, like Bridget's Infrastructure Commission, that would take us away from this short-term, reinforce the current shape of the economy to something that's more guiding in the medium to long term? Well,
I think the fundamental problem which worries me about the British economy is that investment basically fell off a cliff. At least public investment fell off a cliff in 1976 when we went to the IMF, and it's never recovered. Up to that point, we were spending something like 5 to 6% of GDP on investment. Now, I recognise some of that related to nationalised industries which were privatised, but the public sector chronically underinvests, the private sector chronically underinvests. We have a serious productivity problem, which is reflected in very low living standards. So I've been much encouraged by the creation of the National Infrastructure Commission, but I think Parliament might want to consider how we can sort of hardwire greater investment at the expense of current consumption. Now, I daren't mention another fiscal rule because fiscal rules, as you
don't
already
have any at the moment,
too well, change the moment they come under pressure. But it is striking, and I hate input targets, I hasten to add. So I'm reluctant to argue that we should have a investment rule like the overseas aid rule, which is embedded in legislation, but something which sort of forces us almost reluctantly to invest more. And I'm not saying we should invest more and spend more. We actually need to invest more at the expense of current consumption, I think would be desirable. And if you could then underpin that by regional investment plans, which would be, again, reasonably hardwired so that they couldn't just be slashed at a moment's notice, I think we would be on the way to a more successful economy. I haven't even mentioned skills, but I agree with Bridget's speech earlier.
I must say I do share your frustration about our chronic inability to create working skills and vocational sector. I suppose that there's one final question I just wanted to ask all of you, just to maybe make a short comment on, and that is when the OECD and the IMF gave evidence to us a few weeks ago, I asked them about this shift from the Washington consensus, if I could put it that way, to inclusive growth. And I asked them what they thought about the emerging issues around those who were most affected by coronavirus, those who were poorer, those who are in more vulnerable groups, as well as the old. And clearly, with the challenges of climate change looming, we've got to think about both social and environmental sustainability. Would you all just give us a quick comment on how you think we might try to embed this concept of inclusive growth, which the OECD and the IMF have taken up, which is really about having a more balanced economy socially and environmentally, and how, again, we might get to a stage where we can try to be focusing on that rather than just very raw, very price-driven GDP levels. Could I start with Bridget?
Okay, no pressure, no challenge. I think that two things. Firstly, thinking really constructively about how we're going to get to net zero and how that is going to be done in a way which balances everybody's needs is a good way into this, because it is both takes us to a better carbon uses, but also in thinking about the income distribution consequences of that, it enables us to think about the inclusivity as well. And I think the core thing is to think about that balance, because the balance is about how you also have a successful economy which is generating the resources that you need to support people, to support whatever other investments that you need to make. That's why I think devolution is absolutely key to that, because it's also a place where it enables you to have a better diversity of the way that people are thinking about these things, instead of it just being a very sort of top down. We try, in the Infrastructure Commission, we try to go out and talk to everybody. We go out around the country, we have sector discussions and so on. I think that trying to incorporate as many ideas as possible, enabling, so one idea, for example, would be, say, to have special, a proportion of fund in any British Business Bank or whatever, which has to go to small businesses. Those kinds of things, small things possibly, but with the potential for big payoff and for generating that right kind of diversity, which I think we'll in the end need in order to deal with all the underserved, the excluded groups as well.
Thank you. And Professor Lowe.
So again, it's a big question. So let me start by saying I think trying to measure the size of economies or how viable economies are by GDP just seems like complete nonsense. And the fact that it's perpetuated has only happened because we haven't been able to think of anything better. And I think that's just a bit of a failure. I think what has really come to affect us now is in terms of thinking about climate change. And so this is where we have to make substantial differences to the way in which we're structuring the economy. And we're not actually able to measure that or think about whether it's worthwhile doing because we're using metrics which are based around, as you say, prices, narrow prices, and current measures. So I think there's a real kind of tied in with thinking about inclusive growth is about thinking of what is it we're actually trying to achieve and what are we trying to measure. And I think we just make a mistake in the way we're doing it. And the other side of the approach where I think we get wrong in this is the time frame in which we're operating. And I think that's partly because all our measures of success are on flow measures of where the economy is or how well it's doing at this particular point in time, rather than sort of stock measures of what's the stock of wealth or the stock of capital. And I think unless we think about those stock measures, we're not going to be able to think about the trade-offs involved in reaching our climate targets of 2050, and also not going to think about how do we actually seriously take individuals who are at the bottom of the distribution into a better situation, because we're always focused just on the snapshot of the current situation. So I think at the heart of this is that we've got to change the way in which we're thinking about, I know measurement's a very dull sort of topic, but in some ways a bit of it is about changing how we think about what we actually mean by an economy and what we mean by where we want that economy to go.
Really interesting. And finally, Nick.
So just to give you a diversity of views, I'm afraid I'm going to be quite unreconstructed on this.
You what?
Look, I'm all for improving the environment. I'm not a climate change denier, but Britain has done a hell of a lot on this front. It produces so few emissions relative to other countries. And I fear that focusing too much on it actually hits the left behind the hardest. So it would just be nice to get our GDP growing a bit. Let's not call it GDP, let's call it national income. It hasn't grown hardly at all in 10 years. Living standards haven't changed. Let's try and get living standards up. And my approach to inclusion would be that rather than letting the old folk getting all the benefits of growth, let's share it around a bit and ensure that everybody benefits from growth.
Good old redistribution. Thank you, Chair.
Well, thank you, Angela. And that brings us to the end of this session. So could I thank all three of our panelists? I think it's been a particularly interesting session this. And I think, Hamish, your insights around uncertainty and behaviour, given the amount of uncertainty there is around and all the issues of behaviour that we've been discussing, has been really interesting. And Bridget, nice to know the various connections you have with this committee. It seems to me you've never been far away, really. But given these Rooseveltian times and the emphasis there is now on infrastructure, I think what you have imparted to us has had huge value. And Nick, I see you as the wily insider who's probably seen it all before, but you have imparted to us great seasoned wisdom, I think, as a consequence of the experience you've had on the inside of the Treasury. And I think what has also been really helpful actually is the timing of this session, with the Chancellor just having made these announcements literally this afternoon. It's been a great benefit to us actually to have an opportunity to talk these kind of issues through with you as we continue our deliberations. So thank you all very much indeed. Very generous of you to have given us your time. And that brings us to the conclusion of this session. Order, order.
Thank you.
The proceeding has ended.